Okay, welcome. There we are. It's already just gone 4 p.m. We're a couple of minutes behind our schedule, but I'm pleased to say that Adrian is in the room now. There's two Adrians. Um, Adrian, could you send just a quick chat message in the chat box? Adrian Buthee, this is from Trendsignal. I just want to make sure I bring the right Adrian up onto the screen because there's a few Adrians in the room. So if you can send a little chat message, that would be great. Otherwise, we might have a very surprised Adrian coming onto the webinar. Great. So somehow I can invite you onto the screen, and in a couple of moments we'll be able to see. Great. So everybody, we are in session 8 of the webinar. Thanks for staying with me. It's been great engagement today. Loving all the questions. I hope we're answering some questions for you, filling in some blanks, giving you some new ideas for trading. Our next speaker, Adrian Buthee, is the director of Trendsignal. Now, if you're on my contact list, you'll see that for many years I've been sending email promotions to say, look, go and spend some time with the guys at Trendsignal. I've known Jerry since we both started out 25 years ago. Jerry Miller, that is the CEO of Trendsignal, and they've been training traders and mentoring traders and running live trading rooms for many years. So I'm very pleased to sort of continually work with Trendsignal. I'm delighted to Adrian's here today to tell us a little bit more about the strategy that they have been running. It's a 20-minute strategy. It's beaten the stock market by 92% last year. So very interesting to find out a little bit about this. And also giving you the chance to sign up for Trendsignal's events tomorrow, because they're actually running a special summit themselves. They've got all the mentors from the business, very big business based in the UK. Lots of instructors, so they're all getting together as well to explore all the different strategies that they do tomorrow. So if you can come to us and come go to theirs as well. It's going to be a very busy day, but we look forward to that. Adrian, can you hear me okay?
I can hear you brilliantly, Simon. Yeah.
Great. Okay. Thanks for joining us. Sorry, we're just a few minutes behind, but we've had a busy day. But we're looking forward to getting into this. I just sent the folk. You're also doing a bigger event tomorrow yourself, which people are willing, happy to register onto that as well, if
Yeah.
if they can. So.
Absolutely. So we like what you do so much, Simon. We decided to copy it.
I'm happy.
Do you know it, but we didn't know it was clashing, which is actually really irritating. So
Oh, yeah, I think that was
my
my bad.
apologies.
I think that was my bad. I didn't take it all into account when I put the dates in place. But no matter, there's room for us all. And if we miss one or two, everybody's registered. As long as you're registered on both, I think
Yeah.
that's the key thing, because we both
Pick
record
and
these things,
choose. Absolutely.
and you can
Yeah.
go back and watch the replays and so forth. So we've had a great turnout for this 2 days event, and really pleased with the people. We've got people not from all over, and quite a lot of good experience levels as well coming through. So let's have a look. Trendsignal, first of all, as I was just saying there, you offer a range of training and education from people that are absolute beginners, all the way through to people that already have quite a bit of experience but want to improve on their trading. So, am I giving you a fair description of what you offer?
Yeah, basically, you're right. So we provide and develop trading systems that we develop. We use them ourselves to help people, and we share them with individuals who want to trade from home, to help them to trade. I guess trying to break down some of the complexities of trading. I think we all know full well that trading is pretty difficult, right? But there are patterns, there are things that we can use to help us to simplify some of those processes. And what we've done for the last 19, 20 years now is provide systems that help to simplify that approach, help us to identify and fast track the identification of higher probability trades. And that's kind of what I want to go through a little bit about today, and about how we can trade the markets in a more, I guess, a more achievable way than probably a lot of people think trading probably is, or their experience might have been if they've already traded. So.
Sure. Well, before we get started, can I just ask people to let us know that you can hear, certainly hear Adrian's voice, and you should be looking at a white and blue slide with Trendsignal, trade with confidence. Could you just give me a little yes or a yep or something in the chat box just before we get going? We just always do this to make sure we've got the AV on our side.
You know, there's nothing worse than finding out you're talking to yourself, is there?
I've done that. Yeah, I've been there.
Oh, we've all done it.
Yeah. We've done all good. Great. The kids, great. George, Graham, everybody's here. Fantastic. Adrian, let me pass over to you. I'll give you the controls, and then we'll maybe take some questions at the end.
Great. That's lovely. Thank you, Simon. Right. Hello, everyone. So what we're going to do today is I wanted to take you through one of the strategies that we use here, take you a little bit more about it, a little bit about behind the scenes, if you like, about it, because I appreciate that, you know, being a Around the Clock Trader Summit, there are a lot of people who have traded before. So we're going to go through a little bit more about why we do things in the way that we do, a little bit more of the information behind this, the strategy, so you can get a bit of a grasp for it. So what I could do today is just show you a pretty disc on a chart and say, of course, we buy here and sell there, and the session will be over in 5 minutes, but that wouldn't be particularly helpful. So I want to try and dig in a little bit beyond there. Can I get an idea from everyone? You can use the chat if you don't mind. Just tell me whether you've traded before. Just put yes or no in the questions box. That'd be great. Just so I've got an idea on the experience of people's people's experience. That'd be fantastic. And then we can get on with it, really. Good. Okay. So. My name's Adrian Buthee. I'm the head of trading here at Trendsignal. I've been with Trendsignal since 2004. That's when I joined the company, and actually started trading in 2001. I was originally working as a trainee stockbroker back then, and started trading some stocks, some shares, that sort of thing. And that was fine. It was great. Didn't really know what I was doing, working as a trainee on the desk there. But I kind of got the bug from there, and went on and joined Trendsignal in 2004, and been with the company ever since. I'm one of the directors of the company now, and do a lot of work on the development of the tools that we're going to be having a look at today, which is really behind the training courses and the systems that we have here. So it's not just about a system, it's about how we then use the system. So, you know, the traders, the thing about trading is that you know, it's about the psychology, it's about the risk management, it's about making sure that you're trading it in the right way to be able to maximize the profit potential out of this. Old dog, well, yes, probably. Actually, I'm 43 now, so that's for sure. Getting there, Graham. Thank you. So, what are we going to talk about today? I'm going to go through the specific rules for identifying a trade through our flagship, if you like to use that word, strategy. It's called the Sniper strategy. It's part of what we call the Trendsignal Plus system. It's really an end-of-day strategy. So we're looking for trading opportunities on a day-to-day basis rather than a sort of a minute-to-minute basis. We do have intraday trading systems and strategies as well, but to be honest with you, I want to focus on this today because it tends to be the style of trading that suits the most people. What we've also got here is we're going to go through some tools that kind of, again, like I mentioned to Simon earlier, break some of that complexity down. I think that what nobody really wants to do is spend 5 hours a day analyzing charts. I think a lot of people perhaps think that they might want to. I don't know, but in my experience, most people even if they do think that to begin with, they soon decide that actually they don't really want to be doing that, and we all want to be looking for a more straightforward way. And that's what we're going to try and go through today. Look at some of the tools, how we can break the amount of time down, how we can break the complexity down, and start to trade on a rules-based approach. Now, the rules I'm going to go through with you are very much a starting point. So, a lot of our traders will stick to those rules, to be fair, but also we can then help develop traders' skills further through one-to-one coaching, through introducing other elements like support and resistance and discretion and so on, to be able to take results to another stage. So what I want to do is jump straight into it. We're going to go through and have a look at the charts. I'm going to start off with just a very basic overview of a trade, what's behind the system, and then we can talk a little bit more, looking at some other opportunities, recent trades, that sort of thing. So what I want to do is, can we use a pen? I don't know if we can use a pen. That's going to be making it more complicated. I'm used to that. Let me just, I don't think you can. Just very quickly. Okay, guessing we probably can't. So hopefully you can see my cursor okay. So what I've got on the left-hand side, I'm going to be mostly looking at Forex today. So when we look at the markets, it's typically foreign exchange indices and commodities. The reason for that is because these are markets which are most accessible to spread betting and CFD platforms. They're really good markets to trade, really low dealing spreads. I'm sure most of you know all this already. Good leverage available, which means we can really use our capital very wisely there. So that's what we're going to focus on. This particular market is the Australian dollar against the New Zealand dollar, and this is the daily chart. The main reason I'm looking at the daily chart is because when it comes to a trading strategy, it doesn't actually matter how good any strategy is on paper. All that matters is whether you have the ability to follow it or not. And the most simple term of that, way of looking at that is, am I actually going to be there when the trades are triggered? Because if you're not going to be there when the trades are triggered, you're either going to enter trades early, which means you're probably going to get a lot of false signals. You're either going to enter trades late, which means you're probably more likely to back loss-making trades, because it's just the way we generally look at things. We're more likely to back to get into a trade at a cheaper price than the signal was generated at, than a higher price. And so on. There's generally lots of frustrations really with that. So you generally will underperform massively if you're not trading a time frame that suits you. So from my perspective, daily charts. See, I've got 3 kids, I've got a dog. For me, I put the kids to bed, have a look at my charts for 30 minutes or so, 20, 30 minutes, that sort of thing, get my trading done, and then go about the rest of my evening, really. What we've got on the screen here is, and hopefully, I should be sharing my screen. Can you, I wonder, hang on a second, bear with me. Let me just change. Click to close message. So that should be, I think I'm still on the slide, aren't I? So bear with me a second. Let me see if I can just sort that out. Yeah.
We're looking at what you will learn today.
Yeah, that's not particularly helpful. How do I did select to actually share the whole window, but obviously that didn't work. So
okay, well, if you can unshare, if you go down the bottom and say unshare, then maybe start again. Then it it should say stop sharing your screen.
Oh, there.
Yeah. So if you stop sharing and then again, go to that little symbol with the laptop with the arrow.
And then we'll go to entire screen. That's selected the wrong thing. There you go. Nothing like a live session, is there?
Platform. It's like getting in a hire car.
Yeah. Okay. Hopefully we're okay now. Thank you for that. Thanks, Simon.
Thanks, Adrian. Yeah, all is good.
Great. Okay. Sorry about that, everyone. So what we're looking at here is a series of trading opportunities, and I don't have a pen. I can't show you that necessarily, but I hope you can follow my cursor. When we look at the market, what we don't want to do is look for things like support and resistance. And the reason for that is because it's very difficult to do. It takes a lot of time, a lot of hours, a lot of inclination, a lot of sort of things that most people don't have the ability to do. And I'm not just talking about, experience, but time. If you're trying to look at support and resistance on charts, what you end up doing is spending 20, 30 minutes looking at one chart to determine that the trade's already happened or it's not happened yet, or you're more confused than you were when you started. What I prefer is to look at a market changing direction. It's much easier to catch that information. So you can use moving averages and whatever else to do that. We've got our own indicators that we've developed here and settings of those indicators. So the first one I'm going to focus on is this line, this red and green line that kind of cuts through the candlesticks. So this is all about identifying the direction of price. When the line is green, it's right, the price is rising, line is red, price is falling, pretty straightforward. What we're going to focus on at the moment, though, is a turning point or a change in direction. And obviously, that's demonstrated by color change. So when the line changes from red to green, it's telling us that the market is now starting to turn up. Think, if you will, that the market was falling, but all of a sudden the market changes direction. The pension funds, the hedge funds of this world start to change the direction of this market. We don't really want to trade against them. We want to trade with them, alongside them. So as the market starts to rise, we want to cling onto their coattails, move into their slipstream, and take the nice, simple middle part of the move that happens next. So I'm not trying to buy the low. I'm not trying to short the high, simply because it's impossible to do. Or at least I should say, I'm yet to find anyone that can do it that easily. Okay. So yeah, you might have a system that generates support and resistance called it. It might well be excellent. I don't really know. But the point is, what do you then do with it? And how do you then use that information to then work out what a stop loss and target may be? A lot of this overly discretionary stuff can be very, very difficult for individual traders. And again, it might be very easy for you. I don't know. But in my experience, a lot of traders really struggle with that degree of subjectivity. Okay, hopefully that makes sense. So the more subjective it is, the more things that can go wrong. The more rules-based something it is, the more likely it is anyone is able to follow the rules. And actually, if you think about it, pretty much everything that we do in life will be following rules. The way in which we drive a car, ride a bicycle, talk to our mother-in-laws, it's all in a particular way, a proven way that tends to deliver good results. And trading, really, in my experience, can be and should be the same. So what we basically have is a color change, a change in direction. Then what we do is we look at this as like a repeatable entry point, and we're a team of about 25 traders, developers, analysts. And what we've done is we've looked at these turning points over thousands of trading opportunities. And we look at what sort of patterns tend to be happening when good turning points take place. So for example, you'd look at this one here. It was not a particularly good turning point. The market didn't go down very far. This one here, the market turned from red to green here on the 25th of October, whatever it was, doesn't matter. It didn't go particularly far. It wasn't a very good turning point. So what are the patterns that typically are associated with good moves, and what are the patterns that typically associated with bad moves? And much like if you're going to speculate on a football team to beat another football team, you're going to look at home advantage, whether the manager's good, whether the top players are playing, whether they're in form, perhaps what part of the season you're in, maybe to do with the short-term form. Is this team in form? Is it not in form? And so on. You would look at all of these things. And it's the same thing with trading. Not all turning points are going to lead to the same result. Some turning points are more likely to produce a big move than others. So for example, and what we will do with this system is we'll put certain stamps on the chart to make it nice and clear. Now, these in itself are not that useful. It's the combination of factors that tends to produce a valid trade. But for example, what we'll look at here is the line turning from red to green. This buy here, the first, the left hand of the sniper discs there, the line here is blue. That's suggesting that the daily trend direction is positive. Okay, so we're buying a market that is moving into an uptrend. The more you can establish whether a market is in an uptrend or not, or a downtrend, and trade in that direction, the more profitable you're likely to be. Because if you can get the longer term direction right, then more likely you're going to see markets that are moving bigger, further in that trend direction than the corrections that move back a smaller amounts the other way. Okay, so a lot of that is again about sort of breaking that challenge down. So what we're looking at here is the line changing from red to green. You've got a blue line here suggesting the daily direction's higher. WT suggests that the weekly trend is pointing higher. How do we work that out? And the MT is the monthly trend. So you're starting to build a picture. So whenever we look at a particular opportunity, whenever I look at my charts, I'm looking for whether the same line is green on my weekly chart, whether the same line is green on my monthly chart. That helps me to build a picture about the direction of these higher time frames. Okay, so the more I can get that higher time frame right, the more my shorter trade direction, my shorter term direction will be right as well. So what I can see here is a market that is moving up in line with the daily trend, the weekly trend, the monthly trend, and we're also seeing an ascending chart or candlestick pattern in place as well. So what our system recognizes is whether the pattern that's happening before it is an ascending chart or candlestick pattern. If it is, it writes the CP on there. So that's what the system does nice and clearly for us, and also the momentum of the market as well. So what we're looking for is here whether the market is overbought or oversold, whether who's in control, and also the timing of that indicator as well. So whether it turns early or late and so on. What we look at is these combination of these and a couple of other factors to look at what combinations of those tend to produce the highest probability trade setups. And as you might expect, if we can look for a buy trade in line with an uptrend on the daily chart, the weekly chart, the monthly chart, and there's an ascending chart pattern, and the momentum of this market is positive, i.e. the buyers are in control, then really you're looking at the market that is just continually producing higher highs and high lows. So you're building that sort of balance of probability. So we've analyzed not only the patterns that tend to produce the best trades, but also how far those trades tend to go. So, is that going to move 50 pips, 100 pips, 3,000 pips? It's about having that right balance as well. I'm going to talk about that in a second. What we basically get out of this is a system that helps us very cleanly to identify when a market is changing direction, and whether that is a high probability setup. If it is, then one of these discs is automatically popped up on the chart. Now, I've run the scan earlier, and we can have a look at the latest trades in just a second. Okay, so I appreciate this is a few months old. I'm just using this as the example for now. Okay, but what you can see here is the buy on the close of that bar. When you're talking about end of day trading, you're talking about, I put my trades on around sort of 9:30, around that sort of time. That's UK time, by the way. And then from there, I'll then put in a stop loss, I'll put in a target, and I'll move on from there. Okay. So quite simply, it's about trying to look for a turning point and a pattern associated with that turning point that typically produces winning trades. You'll notice that the turn down in this market, the system has not put on one of the discs. Okay, and the reason for that is not because it doesn't take short trades, it does. It's because this is not a particularly attractive short trade. And why is that? Well, you'll notice that there is no CP written on here. There's no WT, there's no MT, means it is not in line with the descending chart pattern. It is not in line with the descending weekly trend because the weekly trend is up. It is not in line with the descending monthly trend because the monthly trend is up, and so on. The picture associated with this turn down here is not one that typically produces winning trades. And you'll notice that it was a very small pullback, followed by a base, followed by the market rotating back higher again, a clear, repeatable entry point, not only from the line changing color, but also the big disc, giving us a big clear stamp on the chart to say, it looks like this opportunity is changing direction and it's a buying opportunity. Okay. So, and you can see similarly, as the market then starts to move higher, no short trade here. Again, largely because the pattern of this move on the 4th of October is the same as this one here. It's just that one went further than the other. The consistency is the key here. Okay, we're looking for more consistent. The disc is a better trade, right? Absolutely. This one, whilst that would have resulted in a winning trade, was a lower probability setup. And actually, from a technical perspective, had you have taken every trade setup that looked like that technically over the past 12 years, you probably would be losing a lot of money. Okay, and therefore, I don't want to be anywhere near it. Now, there might be the occasions where it produces a good trade, but more often than not, I need to look at a pattern. You can focus on that one where it happened to have produced a winner, but really, you can't just look at that one, because if you look at that one, you'd be taking that short trade as well, which probably would have been a loss-making trade. Do you understand? So it's about looking at that more consistent approach. What then happened is the system started to break down, started to break to new lower lows. The weekly trends started to break lower. You start to have that picture changing. And now we start to see a short trade, the market breaking lower, and the system again now showing that on the balance of probability is that this market is more likely now to fall. Okay, so we're trading the daily time frame there. So here the candlestick and chart pattern is now descending. Okay, the weekly trend is now descending. The daily chart direction here, this orange line means it's orange, not blue, which means it's descending. The momentum of this market is now red again, which means it's descending. The balance of probability is now to the downside. It is no longer to the upside. So the bias then comes towards taking short trades. So the system is there to look at these patterns repeating themselves in order to identify profitable trading opportunities, or at least that's the goal. How do we then manage those trades? Well, that then brings us into looking at stops and targets. So one of the tools that we have here is, look, what you can't do, whether you choose to use these systems or not, it doesn't really matter. What you can't do is just guess at what a stop loss and target should be. Okay, but the reason being is that your exit determines how much money you make or lose on a trade. It cannot be down to just guesswork. It needs to be analyzed rigorously, and most people again don't have the time to do that, and that's okay, because that's the work that we've done. What we did is we looked at these opportunities and we looked at typically how far these trades will go. Now, some will go further than this level, but really we have a sweet spot, sort of a balance level between sort of consistency and profitability that our tool here, that we call it TradeMate, you can have this on your smartphone, tablet, whatever. And we click on the disk. We can use this at the time of the trade. I'm going to look at, again, some live trades in a second. And what I can do is I can select the target that I want. So our new members would use a starter target. So these are nice bite-sized targets, high probability, high success rate targets typically, where we're looking to get in, get out within a day or two, and then move on to the next trade. So we're not looking to hold on to trades. We're not looking for that big roller coaster and emotional journey. So the starter targets, and I'll talk to you about performance in a second, is what we select. Now, as you become more experienced with these tools, and we give coaching and so on this basis and live group workshops, you can customize this, and there's a couple of options to select various things. But let's look at the starter targets. You can customize the stop loss as well, but typically we go with the tightest stop. We call it the aggressive stop. So it's a nice tighter stop on this bit here. You can set your risk profile if you want to risk 2% of your account, 1% of your account, whatever it may be. Calculate trade details, and what that does is then gives you then an output. It gives you an output of the stop loss, the recommended take profit level, and the recommended stake per point for that trade. The purpose of these tools is for anybody who doesn't perhaps have a huge amount of time or inclination to spend a huge amount of time, or maybe you're quite new to your trading, so your experience isn't quite so high yet, or maybe you've got lots of experience, you just haven't got great results. Whatever it is, it's about finding solutions to trading that can break those complexities down. So the system here will identify very cleanly for us the highest probability trades. And that's not just what we think, it's the data, how the data has told us over the last 12 years, but also how far statistically those trades are most likely to go. And that's not based on, spending hours and hours and hours looking at, Gann and Fibonacci and goodness knows what else. It's looking quite simply at a tool where the work has been done for you by our developers. Okay. So that's a really good question from Coldip. So does your sniper take account of fundamental news happening on the day? So the simple answer to that is no. But one of the things you can do is look at an economic calendar, and I'm actually going to go through that in just a second, to actually try and, perhaps close certain trades off before major economic data. Okay. Now you could say, well, hang on a second, Adrian, you're bringing in sort of subjectivity and so on. When you're trading daily charts, the most important data is interest rates and non-farm payroll, non-farm employment change. So if you position your trades accordingly around those, perhaps close trades out ahead of, let's say, yen pairs, you might want to close those out before the Bank of Japan has its interest rate announcement. Okay, it's a very quick reference point to have a look. Okay, so I'm sure a lot of you know about that. So what this does is the click of a button just helps us with an entry, and also helps us with an exit as well. Okay. I'll give you an example of this. So we had, if I look at Aussie yen, okay, so we've got some trades here, really nice trading opportunities as it goes. So let's look over the last couple of weeks. We've got 1, 2, 3, 4 trades, okay. So the sniper here, this trade here on Aussie yen, that was a loss-making trade according to the rules. So if I just bring up TradeMate, bring up here, calculate, then the stop loss was at 90.91. It hit that level and stopped out. Now, the reason why you would look at things like economic data is very simply, well, hang on a second. When is the Bank of Japan announcing its interest rates? Well, if you look at the economic calendar and if you look at last week, one of the things you'll know is it's very quick to see this. Bank of Japan monetary policy statement was on the 18th of January. Okay, so actually what any prudent trader should do, and what we would teach our members to do, is to close any yen pairs ahead of Wednesday, January the 18th. So if you are still in a yen pair on the 17th, you're better off closing it out, just simply because it just creates an unnecessary risk. So as an example, next week, we've got FOMC, so we've got US interest rates next Wednesday. Do I want to be in a trade on euro dollar or dollar CAD or something at 7 p.m. on Wednesday? No, not really. I'd prefer to close that trade out beforehand. Why? Because, hey, listen, if you're going to play golf and you've got water down one side, out of bounds down the other, and a massive bunker in the middle of the fairway, you're probably not going to hit driver, are you? You're probably going to approach that hole in a slightly different way. As well we should if we're looking at the markets. Okay, so it's just a very simple thing. Do I need to look at all these other economic data announcements? Not really. Don't get me wrong, occasionally they'll have a bit of an impact, but the most important ones are going to be interest rates and non-farm employment change, which also, by the way, happens to be next week as well. So equally, do I want to be in the Dow next Friday? No, not really. Does that make sense? Cool dip. Okay, what we don't really need to focus on too much with is the fundamentals. What I need to know is where my banana skins are, and I need to just move around them accordingly. And the main reason for that is, like, time is precious, right? You don't actually have to need to spend huge amounts of time in that way, because actually the most important elements are what I've just told you. And actually a lot of these trades, we're only in those trades for a day or 3. Okay, most trades, the average is between 1 and 7 days, but actually I would say the median is probably like 2 days. We're usually out of trades very, very quickly. So the fundamentals don't really change too much on that basis. And that's what the advantage that the technicals do, is that they provide us with the nice clean entry from which we can then trade it. Okay, so let's have a look at this as an example. So this ended up by the letter of the rules, and how it would appear in our record, by the way, this will go in as our record as a loss-making trade, because according to the 100% technicals, it hit our stop loss before it went on and hit target. In reality, for our traders, they'll have got out for a very small loss. Okay, what would that be? A loss of about 20 pips. I'm not saying by any stretch of the imagination that it's they'd have got out here, let's say, or at some point, before that data. The point is, it's about a 20 pip loss, not the full extent of the loss. And that's just simple trade management that really anybody can do. Let's have a look at a few of these. One of the things you'll notice about trading, if you don't already know this, is that a lot of people think that markets move in big cycles, and to a certain extent that they do. But you'll also notice that they move in little bursts of speed of usually between 2 and 4 days. Okay, so what generally happens is you get a burst of speed and then it stops and very often goes the other way. That's the most likely scenario that you'll see. Now, the least likely scenario is a move for 2 weeks in one direction or 3 weeks in one direction. Okay, and actually what a lot of traders tend to try and do is look to trade on what the least likely scenario is, and they're looking for 400 or 500 point moves, and actually it's just so unlikely to happen that in my experience it's just simply not the right way to trade. So what we look at is the most likely scenario, and again, this is by analyzing thousands of trading opportunities to look at what the numbers actually tell us. So if I look at these trades here for Aussie yen, again, the starter targets, so our traders can do this quite easy. The take profit was down at 88.26. Okay, what did the market get down to? It went about 50 pips through that. The point is, hit that level, stopped, reversed, and went back the other way. Of course it did, because if I was expecting it to go 200 points, then my target would be 200 points away. the way in which this market tends to behave with this type of trade setup is a move down to 88.26, which is what, about a 50-point move before it will start to reverse back on us. So in which case, let's trade what the market is most likely to do, not what the market is least likely to do. Similarly, and so therefore that gets to be a winning trade. And the interesting thing about this is, like I said, your exit determines how much money you make or lose on a trade. So you could end up looking for a 200-point move here because maybe we don't know any better, or we haven't done the analysis to determine where a good target should be, in which case that would have ended up becoming a loss-making trade very, very quickly. But actually, if you've done the analysis, suddenly what ends up being a move for only one day hits our target. It's a 1-0 win, if you like. We scratch a win and we move on to the next trade. And actually, it's that sort of similarity, if you like, with football that's actually quite illustrative, that the difference between the team that wins the league and the team that comes fourth or fifth is that ability to grind out the win, to win even though they perhaps didn't play that well. They still managed to find a way to win. And this is the same with trading. Not every scenario, not every trade you take will you call the market perfectly and will it put in a 300 or 400 point move, much like not every football match will be a 5-0 win. However, what our ability to be successful and consistent over time is about understanding that we can make profits even if the market doesn't do fully what we expect it to do, because we expect it not to do that, if you know what I mean. And this is down to the data, the analysis of data, which is all built into these tools. So if I look at this buy trade here, the target there was at 90.55. Okay. It hit it, went to 91, it went to 78, so it went past my target again. This trade here, that was a buy, not very good reward to risk on this one, but the objective was up to 92.27. What did the market do? It hit its target. So would I have liked it to be a bit more? Well, maybe, but the fact of the matter is that's what the system determined it to be. That's what past behavior would suggest the most likely scenario for this trade is a rally to 92.27, and then the market is now more likely from there to pull back and go back the other way. And actually it has done, isn't it? Because now it's trading at 91.83. So the advantage of a system like this is the analysis has been done. Okay. So if I just have a quick look at some bit more data, because I think this is important. There is many ways in which we can look at data. I've got here some data going back about 12 years. So to the end of last year. So few weeks old. We tend to look at this stuff on a quarterly basis. But anyway, remember, Trendsignal's been around since 2003. So this is not a strategy that's written on the back of a cigarette packet. This is about a strategy that has been, considered very carefully, both in terms of entry, but also exit, and also analyzed over a significant period of time and data. When you look at those sniper trading opportunities, and we're looking here at Forex indices and commodities, we have a list of trades. I've only looked at Forex so far. If you looked at all those winning trades and then subtracted the losses from all the loss-making trades, the end result from using those starter targets I showed you using that TradeMate tool is up 152,000 pips over the last 12 years. That's averaging just over 1,000 pips a month. And typically we're in a trades for a few days with a 73% win rate over that period. So quite a high success rate over that period. And also it's averaging about 50 trades a month using this particular system. Okay, so it gives you an idea that it's, this strategy is about identifying trading opportunities, but there's also good pedigree behind those opportunities as well. Now, 2022, a little bit behind where we might like it to be on a performance perspective. It was up 6,800 pips, which is a little behind the average. That said, it was up, I think it was 72%. By risking 2% of your account on each trade. Part of the reason for the title for this session was, what was it? The US stock market was down 20% last year, or 19.4% on the S&Ps. So it's outperforming by over 90% just on that one strategy alone. And that's on a relatively bad year, to be fair. But it's still a significant profit potential. The average has been over 193% there. So, in the average pips, 12,000 pips. I don't want to make it sort of death by PowerPoint here. What I want to do is just demonstrate that there is history behind these numbers, and I want to go back and have a look at a few more charts. So what we've got is a scanning tool. So you could use this on your smartphone, your tablet. I'm going to look at trades over the last 4 days. I'm going to look at Forex just simply because I know that I don't know where everyone's from today. And I know that particularly people who are in the US, it's quite hard to trade more than just Forex on one or on their account, like indices and commodities. So it can be a little bit more challenging depending on the type of broker you're trading with. So let's have a look through some of these. So for example, if I wanted to look at an opportunity for, say, Aussie New Zealand, I've got a trade that's setting up for today. Okay. Big rip roaring candlestick that's happening there. So the scanner is something that, what are we, 4:45 now or something? We'd run this scan, we'd look for the opportunity, and we'd then look to run TradeMate off it. Okay. So the routine for this system is to, again, breaking complexity down because the work's been done. What we have here is a market that was falling. The pattern associated with that fall is not a pattern that typically produces great trades, so there's no disc on it. However, as the market then turns back higher again, this is a solid pattern. Okay, so here we've got a market then turning back up again, and we're looking to buy in line with the weekly trend. It's back in line with the positive or ascending chart and candlestick pattern, and the momentum in this market's going there as well. Which platform do most of your subscribers use for trading Forex? So a lot of it is spread betting, Peter. A lot of our members are in the UK, but we do have customers from all over the world, to be honest with you. A lot of them are Oval, IG. We have members at markets.com, FXCM, Trade Nations. There are a few actually that are out there. The important thing, actually, Peter, if your question is, well, which is a good platform to trade, there are many similarities with platforms. The most important thing that I could encourage for you is to trade with a broker that gives you the minimums that you want. So the minimum trade size that's low enough for you to be comfortable. There are many brokers out there that will force you to trade minimums that are too big for you, makes trading therefore very psychological, very emotional, very scary, very daunting, because you're risking too much money than you're comfortable with. So make sure you're trading with a broker that you can trade very comfortably with. So for example, Oval, for example, which used to be called ETX Capital, you can trade from like 1p a point. Now you might think 1p a point, who the hell trades 1p? It doesn't matter. The fact is you have the flexibility to do so. Okay. There was 37 markets in that list, George. So the currency pairs wise, there's 28 currency pairs in that, which are the obvious ones, an Australian dollar against a pound, against a euro, against a yen, against a US dollar, Canadian dollar, etc., etc. So what that is, it gives us a nice clear trading opportunity. Is this all making sense so far, everybody? Just give us a quick yes or no. I just want to make sure no one's bored to sleep just yet. Let us know we're all okay. In terms of other trades, let's have a look back through some of these prior trading opportunities. I know we've got a couple that are on the cusp of giving us a trade. So Euro Sterling is nearly there. It was looking like one earlier. We'll have to see where we go with it. Is the system, can it work on MT4? No, we use a charting platform called Charting Center. It has all the code on there. One of the problems with MT4 is that the broker the data will be different depending on the broker you're with. It can lead to different signals. The time at which the daily candlestick closes can be different, which depends on where the server is. So what you end up with is different signals for everybody, and it ends up being a complete nightmare. So actually, we'd rather be in a little bit more control than that. So we focus on one particular platform for our analysis and trading. You can then trade with a broker that best suits you. Okay, so this is with Charting Center for the charting, the broker platform. To an extent, they're much of a muchness as long as you can trade the size that you want to trade. So let's just go back to some of these more recent opportunities. If I looked at, for example, pound against the Australian dollar, there was a sell trade there. And this is a classic example, right? You're seeing a sell trade, which is great. It's gone down and it's fallen. What's it fallen? 170 points or something after the short. Now, why was this a sell trade? Because the daily trend direction was down. It was showing a descending chart pattern, a descending weekly trend, and so on. The balance, I'm just going to show you a pencil here, but you're more likely to see lower highs, lower lows. The bias is to the downside. Therefore, what that means is that you could take a buy trade if you want to, but it's probably more likely to result in a loss, in which case, what do you want to do that for? You could do it, but you probably need to be a bit more careful with it, maybe a bit more experienced with it. But I would rather our less experienced members and people who perhaps don't want to spend huge amount of analysis time, I'd rather we focus on those higher probability setups. Like here. So what that's done is it's given us a really nice trade. We've already taken our profit out of this trade, and the market's now rallied back off those lows, and it's actually not as low as our profit was there. Okay. With many pairs traded, do correlated pairs give concurrent trades, increasing reward to risk? Really interesting question. I'm going to share something with you on this basis. I was actually talking about it in a webinar on Tuesday. I'm going a little bit technical here. I know that. What I'll generally find is that trades that trigger a little bit earlier tend to be more profitable ones. So there was a short trade here on the 13th of January, which was, we talked about this earlier. It didn't quite get to target before the data came in. But if I look at New Zealand yen as an example, that trade triggered on the 12th of January. So getting into the trade that's a little bit earlier is usually a higher probability, more likely to be a profitable trade. It's a little bit like if you've seen the stock market rising for 5 days, if I'm looking at trades that give me a signal after day 1 or day 2 of that rally, they're the ones with more oomph behind them, or impetus, more vigor behind them, because they're the ones that are really going up, that everyone's really into. The ones that then give a signal on day 5, to a certain extent, they're being dragged along, kicking and screaming like a naughty kid being taken around the shop. So, they're probably less likely to be a winner, because by the time you get an entry, if you again go on the basis that the markets tend to move in bursts of speed of 3, 4, 5 days, in which case, by the time you get an entry, you're probably more likely that the market's done. Okay, it's done that move. So with correlation comes, it is probably a preference to get into the earlier opportunities that are, say, yen pairs than the later yen pairs. But to be honest with you, the data I showed you earlier is zero discretion. It's based on trading all of them. Okay, so again, hopefully that makes good sense. All right. Okay, does that make sense? Hopefully, George, that's okay. So again, you can look here, various opportunities. We've got the New Zealand yen, which is a nice trade. I don't know what's happening there. Little gremlin in the system there. There, calculate trade details. And here we're looking for the market. It was 84.31. It went up into the 50s and 60s before the market came back the other way. Again, it's about sort of reducing it's about trading the probability really as much as anything else. Okay, so that's New Zealand yen. We could look at all sorts, to be honest with you. Aussie dollar is again another example. You're seeing another market that's moving. Daily trends positive, momentum's gone back positive. This pattern here, not a clean opportunity, so we're nowhere near it. Don't get me wrong. If this move here was moving against a major resistance level, our more experienced traders might be interested in a short, but I'm not going to spend time on that now. My focus is on the highest probability trades, and that was the buy here. So at 23, the market then rallied about 100 points. It's a winning trade. Okay. And Simon's just posted a link, by the way. We're doing a whole day event next week. We've got about 16 different events coming through tomorrow. Click on that link and you can register in. We're doing various ones on strategy, risk management, psychology, a lot of real beginner stuff, a lot of more experienced stuff. You register once and you've got access to those sessions for the whole day. If you just click that link and register, that'd be great. I'll be doing 2 or 3 different events throughout the day. So if you're not bored of me already, you can come and listen to some more. You probably don't want to. You might hear some of the other presenters, but then traders, and that's fine. Do you allow natural gas? I don't know what you mean by that, Coldit, but do I follow and trade natural gas? No, but you could look at these indicators on natural gas if you wanted to. It comes in on the data feed that's here. Okay, I think there's a nat gas that comes through on the FXCM feed. Okay, so that's Aussie dollar. What else have we got on that list? Aussie Swiss. Very similar opportunity. You might expect that element of correlation that's coming through there. But again, another buying opportunity. Again, the market rallying, that burst of speed for 1, 2, 3, 4 days. And now it's starting to drag its heels. But we've already got out and taken our profit there. And again, I sort of liken this to kind of raiding the market. And we can actually speed the sensitivity of these indicators up a little bit and trade what we call the accelerator strategies. So we can actually trade it a little bit faster for shorter durations as well. So for more trades. So this system is, if I look at this on, say, euro dollar as an example, got it here for euro dollar, but actually I can trade the accelerator strategy again using this system, and we get more trades. So, here you got a buy trade there. It's a more sensitive setting for the indicator, allows us to get in trades earlier. So, for example, there was a buy on the 20th of Jan, market rotating again on euro dollar, wasn't on the slower setting, is on the fast setting. Some of our more experienced traders will migrate onto this this setting with this system as well. And then on that goes. What did the market do? It rallied, 70 or 80 points. Hey, that's enough. 70 or 80 points. What was my stop loss there? It's about 38 points, and the market moved 70 or 80 points. I'll take 1-to-1 on that all day long. And it's a really nice, clean trading opportunity that we can identify there. Okay, so that's the D1 Sniper. The way we generally work is that with our members, you can subscribe to this system on an annual basis or a lifetime basis, and we can talk about that separately. I'm not going to do it now. But basically, the way it works is that we start our traders off by following the rules-based approach. You can then look to develop your skills further with additional strategies that we teach using this system, and also the ability to outperform, look for bigger targets on certain trades and so on. And that's phase 2. That's all through our coaching programs, our workshops, which are all included in our annual license fees. Okay. The D1 accelerator strategy, again, I liken this to the idea of raiding the market, sort of being in and out before the market even knows that we're there. So whilst it's end of day trading, I'm not holding a trade for 3 weeks. My trades are typically, my average trades with the D1 accelerator, they average 1.4 days. Okay, so I'm in and out of trades really quickly because that's just the way I prefer, like to get in, get out before the market can start to turn back the other way, and really look to trade the momentum. And when you think about the advantage that traders have over, compared to investors, their advantage is perhaps time. Traders don't have time as their advantage. Traders need to look to momentum. And I look to get into trades. The system looks to get our members into trades that are following that momentum, and then exit those trades before that momentum looks to subside. Okay, it's basically how we operate. Okay, so hopefully that's kind of useful. I'm probably going to move on a touch now. I just wanted to give you a little bit of sort of performance data. Both of those strategies over the last 3 years, you add it all up together, it's up around sort of 65,000 pips or so. So there's a lot of profit potential from trading this as well. Sometimes the performance numbers just get a bit stupid. But what I always say is, look, you're not going to trade every day, and you don't need to. There'll be days when you'll go on holiday or you'll go to the pub or whatever else. But half of the numbers that this system has produced over the last 3 years, 12 years, whatever, are extremely attractive. And the great thing about it is that the system and the coaching that we can provide can take a lot of that complexity away. So like Simon mentioned, Simon's posted a link that something that we're hosting tomorrow, 26th of January. We're running some web classes, and hopefully you found me relatively interesting, or at least totally not boring, hopefully. We've got a series of sessions tomorrow where we're just going to share a lot of information. It's free. We're doing 16 different events. We're going to go through all sorts of different topics, which I've got on the right-hand side here. It's probably too much for one slide to go through, but I had to sort of put it on there. I'm going to be doing some live trading. We're going to be doing some live trading, live intraday trading, live end of day trading. We're going to talk about some of the basics and essentials for trading, some live analysis. We're going to be talking about psychology and risk management, loads of different things and topics that are going to make a huge difference to anybody's trading that wants to attend. So if you'd like to come along today, don't think Simon doesn't know about this and I'm trying to get all his members away from tomorrow. Pick and choose. If you'd like to come along, I'm sure there are some events on there that would be really suited to you, and there probably are some that are really suited to the round-the-clock trader that you guys have got on laid on for you tomorrow as well. So attend, register, and see if something that we can help improve your trading skills. And maybe if you're interested, you might be keen to look at one of our systems and maybe get access to it on your smartphone, tablet, laptop, desktop computer, whatever from home. If you're interested in that, I know Simon's posted the link. You can see that on the chat. Otherwise, you can see the web link there, www.trend-signal.com/RTCT, round the clock trader. Click on that and hopefully we'll see you online tomorrow. But otherwise, Simon, that's that's pretty much it.
Thanks, Adrian. Yeah, we're spoiling people, traders.
Yeah,
Too much stuff going on. You've got some great topics in here, though, and I guess the speakers are people that have work with you. They're other instructors, and
absolutely. Yeah. So we've got some of our coaches, some of our traders from the team here. Jerry's coming on doing a few bits as well, sharing some of his sort of
great.
however much 300 years of experience that he has. But look, what we're trying to do is just give a bit of something for everybody. There are. I think sometimes we assume a lot of experience, a lot of understanding that a lot of our prospective members might have, and maybe sometimes we don't assume enough. And that's what we're trying to do here, is just give a lot of that sort of nurturing, a lot of that that experience that we have in a really easy to consume way, really.
It's fantastic. Yeah, I wish I'd thought of it. Fantastic. Listen, no, I mean, in all seriousness, Adrian, thank you for that. I can see from the questions we've had that it really you've got the minds ticking with the people that are in the room just now. So I hope that's been good. And if you like that sort of style, if that's the sort of trading assistance that you feel would help with, Adrian and the team are there to provide that. They've got the various strategies. Do try and pop across tomorrow and find out a bit more about all the things they have to offer. So absolutely tremendous. Adrian, thank you so much for coming on, and thanks for all the support you give to me over the years, and hopefully we can continue to do that in the future. But good luck tomorrow with your online summit.
Great. That's great. Thanks, Simon, and good luck for you as well. And thanks for allowing me to be here.
It's been a pleasure. It's been a pleasure. Take care.
Thanks, everyone. Thanks, Simon. Bye-bye.
There we go. Oh, my camera's not on. Fantastic. Okay, we're just going to again pause for just a few minutes while we bring in our final speaker. Really pleased to say we've got Steve Ward coming along. If you don't already have a copy of this, it might be worth ordering a copy on Amazon or Harman House Publishers. Bulletproof Trader, written by Steve Ward. He is coming up next for a discussion on trading psychology. Probably the most important part of all the stuff that we've been doing today is being able to think like a trader, think like a successful trader. So just a few minutes and we'll pull Steve into the presenter chair, and we can get started on our final presentation. So thank you so much for staying with me. It's been a great sort of attendance. Everybody's still here. It's tremendous. Normally they drop off to go pick up the kids, or I don't know, whatever it is, walk the dog. But we've had a great attendance today. I really appreciate it. I'll see you in just a few secs in the final session with Steve Ward.